Okay, folks, this is Bob Desmond. Welcome to the Contrarian Trader. I'm going to go over a series of charts today. The first is going to be the HGX, that is the housing index, Philadelphia Housing Index. Next, the banks, the XLF, one of our investment holdings and one that we're going to be looking to add in the coming days, QTWW, that's Quantum Fuel Systems Technologies. Next stock up is EGLE Dry Bulk Shippers. That's an intermediate term trade. This is a short-term trade. Outer Wall Inc., extreme oversold trade. Popular, BPOP, an extreme oversold trade. And I'm going to want to talk about the 10-year Treasury yield. Now, before I get to these charts, I want to talk about them in detail, and I will. Before I get to these charts, I want to talk about the winners and losers from last week. Now, you've heard plenty of opinions on CNBC about whether it was right or wrong what Bernanke did last week. You know, I'm not going to tread on that water again because it's been covered. It's been covered ad nauseum. It will continue to be covered ad nauseum. So I'll spare you my opinion. But let's touch upon who the winners and who are the winners from last week. And I only have one winner from last week. And let's take a look at him. The winner from last week, Larry Summers. Why? It's because Larry last Sunday had the wisdom and plus a little bit of information about what was going to unfold this coming week. He had the wisdom to say, no way do I want that job if Bernanke is not going to start cutting back, set precedent, even if it was $5 billion. Forget about the 15, 20 billion, $5 billion. Get the ball rolling. Don't leave it for the next Fed chairman to have to make that decision, and all of a sudden he's the pariah if the market tanks, and you know it's going to. So Larry Summers said, no way, I'm washing my hands of this. So that gets me to who's the loser from last week. The loser last week was Janet Yellen, because Janet's a soldier. Janet's going to do what it takes to become next Fed chairman, come hell or high water. That's her destiny. However, Janet is going to be put in the position of having to be the first chairman to taper. I don't think Bullard, the Cincinnati Fed president, was right last week when he said that they would begin tapering or might begin tapering in October. I think that's BS. It's not going to happen. The economy is not strong enough. So Janet's going to be the fall guy. She's going to have to take the hit as being the chairman that pulled back on QE3, sending the economy, rightly so, into a tailspin because it's what's juiced this market for the past 5 years. Now, let's get on to the next person who I'm not going to say is a loser. I'm going to say showed his true colors. He showed the lack of humility that he has, and that is good old Bernanke. He was asked the question of why he telegraphed that he would be tapering come September. And Bernanke said, I never said anything to that effect. And he's right. He didn't. However, he had his board presidents go out, make speech after speech after speech, directing the market in the right direction, the tapering direction. He could have controlled the message. He didn't. The markets adjusted. And Ben just said on Wednesday, we're not going to taper. And Ben believes himself to be so powerful that he can keep rates down indefinitely. And nothing could be further from the truth. And let's get to the charts, and I'll show you why. What you're looking at here is a chart of the 10-year Treasury bond yield. Not the price, but the yield. I stated in late December, early January, you were going to see a rally in the 10-year yield, and I drew this trend line down. Expect this to hit 3% by year end. We've rallied. We fell just shy. We closed at the high of 2.98 reached last week. Just shy of it. Now, I told my members in last week's The Week Ahead commentary, expect a pullback in the 10-year yield due to the fact that we have these topping tails. Forget about the FOMC. Expect a pullback. They had a huge run. Expect a healthy pullback. Now, what's going to happen if we do get a continuation pullback and the Federal Reserve keeps buying bonds, monetizing the debt, and all of a sudden you have a breakout on the 10-year yield? Guess what? They're going to have to buy more bonds to keep the rate lower, because the housing sector cannot grow with a yield at 3%. It can't grow at a yield at above 2.7%. Take a look at the chart again. Overlaid here in black, I have an overlay of the Philadelphia housing sector. And I'm going to get to the candlestick chart in a moment. But take a look at this chart. It had a beautiful rally, and all of a sudden you had this huge candlestick form on the 10-year yield right off of support. What happened to housing? And that was at a low of 1.66. Let's round up to say 2%. At 2%, the Philadelphia housing index rolled over. It couldn't stand it. It couldn't take the pain. Building permits last week dried up. Housing starts fell. So what does this say for the value of QE3? What you didn't hear last week was the fact that QE3 has failed. Let's get to the chart of the Philadelphia Housing Index. You can go back and take a look on Twitter and on StockTwits. I posted this chart several weeks ago, and as the market was continuing higher, I questioned the health of the housing sector, and nobody was talking about it. The fact that the housing sector was nearing a bear market. Peak to trough, peak 210, trough 164. This is a 20% retracement on the Philadelphia Housing Index. This is during QE3. Could you imagine what would happen if they pulled away QE3? There was no way they could stop QE3. And just by virtue of the fact that we had a bear market during QE3, Ben Bernanke should just resign. He should resign because he refuses to admit fault. And that's why he could never make it as a trader. Because in academia, you could be wrong and stay wrong until you're eventually right. As a trader, if you do not admit you're wrong fast, you will cease to exist as a trader. That's the way it works, right? So in academia, where he's from, his models to him are absolutely correct. Pedal to the metal, we're going to stay with what we're doing. But in the real world, Ben's wrong. And the charts are telling us that. Take a look at the banks. This is the XLF on a daily basis. Take a look. The S&P 500, which I have overlaid here in black, has rallied to new highs since the August correction. Whereas the banks have underperformed. They're laggards. That's not a good sign. The banks make up 17% of the S&P 500. So you need to have your banks with you in order to have the S&P 500 break out to new healthy highs, and you're not getting that. Okay, some stocks that we're looking to trade in the coming week. Well, this one is one that we've already owned. We've held it for a couple of months now, and this is a weekly chart of the QTWW Quantum Fuel Systems Technologies. This is one that I really like, and I plan on adding more. I'll be sending out alerts to members. If you want to become a member, by the way, if you're looking at this, you decide, you know what, I want to trade these stocks, I want to see what this guy is doing, my website is under redevelopment, okay? Please, just shoot me an email. I'll send you out a link on how to join. Don't try to log on right now or use the payment system. The site is still under construction. I'm working with my developers to get it fixed. My apologies. So please, just send me an email. I'll send you out a link, tell you how to join, and we'll get you hooked up. As a matter of fact, my prices went up. My old prices were about $288 for the year, $29.95 a month. They're going up to $49.95, and I forget what it is for the year. It's about $450 for the year. So I'll get you in at my older price because the site's not up and running yet. It's not fair to you. So sign up, and I'll get you all my commentary, videos, etc., at the old price. All right, that being said, Quantum Fuel Corp is breaking out on a weekly chart. This is a closing basis. Nice little breakout here. Take a look at your RSI. Nice breakout. Very, very healthy. Looking good. Volume, under accumulation. I'm liking Quantum. I'm going to be planning on adding to that position. I want to first do a pulse check on where the market is. How is it going to hold up? Do I want to get involved with buying more long positions at this point in time? I will be sending out alerts to members. So I already did the market pulse check, sent it out to members. That's a video of where I think the markets are heading in the coming week and weeks. That's already out to members, and sign up for the 14-day free trial offer, and you'll get that this weekend as well. Next stock up is EGLE. EGLE Dry Bulk Shippers. This is a monthly chart. And you might be saying, oh, where were you back here? Well, back here, we doubled our money on EGLE Dry Bulk Shippers as a trade, and we got out. Since then, it's really consolidated nicely, broken out. I really haven't watched it all that much, but I was taking a look at the Baltic Dry Sea Index, and it's just exploding through the roof. So I went back, took a look at EGLE Dry Bulk Shippers. Sure enough, the stock is performing very, very well. I'll be sending out an alert to member when we decide to open up a trade. We do not own this stock as of yet, but we just may very, very soon. It's overbought on a daily basis. We need to have a pullback, consolidate nicely, then we may get involved. Next stock up, OUTR, Outer Wall Inc. These stocks are our bread and butter stocks. This is what we do as extreme oversold stocks. We just swing trade them. And you have an RSI of 14.41. The key with trading these stocks is to identify historic support, historic resistance, and see where you're standing on an intraday basis. And this stock right now is still in free fall. I think we're going to head lower. I'll be discussing this with members tomorrow on the Focus Stocks video. So again, sign up for the 14-day free trial offer, and you'll get a detailed analysis of where I think the best price target is on OUTR, when we might get involved, where we stand on an intraday basis, and historical support and historical resistance. And I can discuss that now. You have historical support, which was at 51. That's now historical resistance. So you don't want to get involved with the stock right now. It's too far away from its next support level. You need to have discipline. 46.25, I doubt it's going to hold. I think we're going to head down to $45 per share. And then we need to see, how is volume rolling in? Is it still under distribution? And then take a look at the intraday chart, see if we're seeing some strength intraday, and then we may open up a position. And with stocks like these, if you decide that you're going to buy all your shares at one time, you're going to go broke. You need to know how to buy these stocks incrementally, okay? So please, use caution. Last stock up is going to be BPOP, Popular Inc. RSI is at 17.45. Interesting. Note the volume under huge distribution. It's questionable whether or not this support level is going to hold. We're going to drill down a little bit further on this one. I'm going to want to drill out to a weekly, monthly, and then go back into a 30-minute chart to see where the stock might be headed. Is this good enough support for us to get involved? We don't know yet. We need to do a little bit more analysis. I'll be doing that tomorrow. I don't like the volume bars, I can tell you that. You need to be very, very careful with volume bars this high. You want to see them drop off considerably because this is institutional distribution, and that's why the probability of us adding here is very, very low, especially in light of note the topping tail on Friday. They tried to rally it, it failed. So the probability of us trading is on Monday very, very low. I think we're going to cut right through this support level like a hot knife through butter. Note the slow stochastics looking good, but I think there's a little bit more pain that the stock is going to have to feel before it's time to get involved with it. And that's it, folks. Again, take advantage of the 14-day free trial offer. Shoot me an email. I'll get you hooked up with a membership. Prices are going up, folks. It's a lot of work that I do, a lot of analysis. I think you're going to find value in it as an investment. It's a very, very small price to pay, so please sign up for the 14-day free trial offer. Cancel at any time. If you don't like it, cancel. And that's it, folks. Have a great, great trading week. Again, if you're interested, get my market pulse check video, which I sent out today. You need to be a member, and check out my Focus Stocks video tomorrow. And talk to you soon. Bye-bye.